Good afternoon, Jay Nauta, your reverse mortgage expert. Got a tip today of many folks don't understand the home equity line of credit when it comes to a reverse mortgage. So I wanted to just put a real simple illustration for you today, and hopefully this will bring clarity to it because it's pretty basic. Let's talk about a few key things. Number one is age. We're going to use 62 because that's when you can begin a reverse mortgage and take out a reverse mortgage. So let's make it be assumptive maybe that your home is paid for. You paid that off over your lifetime now. You're 62. You've got a $400,000 value in your home. Um, we've got two different rates I want to talk to you about specifically. Is number one, the rate that you're charged to use the money. This rate can go up or down. Um, and as that does that, these numbers will change a bit. It's the same with the line of credit. They're identical. 6.25 currently, 6.25 currently. Same thing. Rates go down um, and rates go up. It would affect these numbers in here. Real important to understand. Very similar to when the market falls on your property or the market increases on your property. There's some security. If the market falls, this value is going to change. It's going to go down. Right now, properties are beginning to fall. We're having some housing bubble right now. People have been really excited about their growth they've had over the last 5 years. I want to talk to you about how to secure that. So let's talk a little bit about that. Let's focus on cost here a minute. It costs to do a reverse mortgage. It's going to cost about 4.5 to 5% estimated, pretty close right there, of the equity of your property as a cost to do a reverse. So if your home is paid for, you're going to start year one at roughly $19,000. That's going to be your mortgage insurance premium one time, which is 2% of your home value property. You got your closing costs and you got an origination fee. That's how I get paid. So over here at the line of credit, we're going to see this continue to grow, and we're going to see this continue to grow in balance. So we'll talk a little bit about that. Year one, you'll see year two, 20,000, 800, 22, 23, 25 plus, and let's just run it to 6 years at 27 plus of what you would owe in a balance because you're not required to make a monthly payment here. You don't want to. So that would continue to grow in balance. Let's go over to the line of credit real quickly. The line of credit, year one, you'd get about 40% of the value at age 62. So you're not going to get a whole lot. You got a lot of equity remaining in a reverse mortgage. Folks don't realize that. But the more mature you are in age, the more the reverse mortgage, the higher that number is going to be, the more we're going to lend you. But let's just start with year one. You'd have $131,000 because you literally had the original cost. Year two, now it grew to 140,000, assuming this 6.2% rate. Third year, 150. Fourth year, 160, 171, and in the sixth year, 183 plus thousand. And the reason why the big jump there is because I've had clients reach out to me and go, Jay, hey, I've made some extra money. I've worked a little bit. I just received an inheritance. I've had some money sitting in cash. What would you do with it? I said, well, what I would do is reduce your balance, make a payment to your reverse mortgage. And when you do that, let's say you do 27,000, that would automatically default to the line of credit. Automatically. So that's what made that move from 183 to 210,000 now available. So the interesting thing about this is guaranteed by the federal government to continue to grow as long as you maintain your property, maintain your insurance, your property charges. This can never go down unless you withdraw money out. So if you didn't need anything and you wanted to prepare for in-home care, just have that line of credit available for maintenance and repairs and upkeep and things you'd want to do to the property, that's going to continue to go up in value, which is really interesting is your property value. If your property value falls from the 400, this does not, which is really interesting. So you can secure at least 40% of the value of your property in a line of credit that guarantees to grow with this product. So that's a reverse mortgage line of credit. This is a comparison let side by side. You would like to have more information on that, please reach out to me. I would be honored to get more details in regards to your current situation and help you see even more potentials here. Appreciate you and have a great day today.